Problems come up with notes, and it's like anything else. With enough time and enough money, any problem can be solved, right? If there's a document issue, title type of issue, it may take a year to do the legal work and the expense to clean that up. But in the end, now you have a clean file, all tightened up, and the value is now greater than what you bought it for.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Fred Moskowitz manages a mortgage note investment fund and is considered an industry veteran within the note investing arena. Fred, welcome to the show.
Thank you. Thank you, Sam. Great to be here.
Hey, the pleasure's mine. Fred, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Yeah, absolutely. I started out working as a computer engineer in the technology sector, had a great career with that. But through all the turmoil, the bursting of the dot-com bubble and everything that happened there, I realized that I needed to have other sources of income so that I wasn't taking that risk of relying solely on the paycheck from my job. And so from that, I got involved in active investing in different types of assets, rental real estate, built up a portfolio there. And then after some time, I got involved in mortgage note investing, which is the whole idea is buying notes, and then you step into the shoes of the bank. You become the one receiving those monthly payments. And I've started to scale out and grow that business. And over the years, it has evolved. Eventually, I formed my first note fund and started raising capital through offerings, and that brings us to where we are today.
Is there a particular type of note that you're buying? You know, I know that there's such things as first liens, performing notes. There's second liens,
yes,
non-performing notes. Like, is there a flavor that is the one that Fred really likes?
Yeah, absolutely. I focus on residential notes, performing notes, and we buy all over the country, nationwide. But as you mentioned, yes, there are so many different types of notes, different niches, and they all have different business models around them. But some do better in certain portions of the market cycle than others. But right now, in the environment we're in, I find that performing notes on residential properties is a very solid and stable asset class. And so that's where the majority of my focus is at this point in the market cycle.
Got it. So that's where you're seeing opportunity. What are some risks maybe in some of the other types of notes that are being bought right now that you're avoiding?
Some of the risks revolve all around, it's about managing risk and doing good due diligence. Some of the risks that I see in the industry, there is a growing trend for increased regulation from the government, both at a federal level and at a state level. And so that's always something to keep an eye on for us that are active in the industry. Other areas of risk are looking at, since we're buying notes that originated maybe several years ago, we have to look at current market conditions and seeing if there might be any negative impacts that are there. So that's always a concern. And with any type of note, there are always threats to the lien. Threats to the lien could be taxes going delinquent, or homeowners association dues going delinquent, or a senior lien that might be ahead in priority, not being current. So there's all these different risks that are out there. However, they can all be managed. They can all be managed with the proper processes and systems in place. And so it is important to do that. People sometimes think, oh, note investing can be passive. I'll just buy some notes and put them off on the side, and that's it. But it does require constant monitoring. And you can either do that yourself, or you can outsource that through different service providers to help you. Especially if you have a larger portfolio, you're absolutely going to need help with that.
Why does someone invest in a note buying fund versus going out and just acquiring a handful of individual notes on their own?
Yeah, great question. Great question, Sam. It really comes down to how much time do you have available and how much time do you want to dedicate to being an active note investor? Note investing takes a lot of time. It's really a full-time business to be successful, for you to be effective. And so if you are seeking to dedicate yourself to that, being an active investor is a great way to go. Going out, buying those notes, creating those relationships with the people in the industry to be able to have access to buy notes and sell notes. For many people, they don't have that time, or they're focused on their own business, their own career. And so a better option is to be a passive investor in a note fund. The same way with investing in an apartment syndication, right? For instance, for me, I do not want to own a large 500 unit apartment complex. I have no business doing that. However, I love the asset class. So yes, I will invest passively in a syndication and benefit from that. And with note investing in a note fund, it's the same idea. The passive investors, you as a passive investor, you're able to leverage the expertise, the experience, and the relationships that the fund managers have and benefit from that. And so it creates a win-win relationship there.
What are some things you're doing on, I know you mentioned some of these risks. We'll kind of circle back in the conversation. You mentioned some of these risks. What are some things you're doing to stay on top of those? I mean, I can imagine that if you get a super lien, such as, city or county taxes, yep, right? They're going to probably notify you as the lender of record, I would assume. But how do you stay in front of those things, just to kind of offset some of that risk? I'm thinking about, maybe HOA and HOA, I'd probably imagine is probably also going to notify you.
Absolutely.
But
absolutely. You need to be proactive with that. Now, there are several vendors and services that will do monitoring on your behalf, and they will check regularly. You can check it yourself as well. If you just have a small portfolio of notes, sure, it's a quick phone call down to the tax assessor's office to make sure that taxes are paid. Yes, in most states, you're supposed to be notified and all this, but not every state. And so I wouldn't rely on that. And if you're getting a notification, that's really far along in the delinquency. So it's better to get ahead of the curve with that. And as the lender, you have the right to protect your interest in the property. And part of that is you can reinstate delinquent taxes. You can reinstate delinquent homeowners association dues. You can reinstate a senior position mortgage as well. And so these are different ways that are part of the rights and remedies that are in the mortgage documents.
Got it. But I guess is it and other than hiring a third party service, or not third, that's not even the right word, third party, but hiring a third or an independent company that monitors this for you, is it otherwise just a manual process of just, hey, every once a quarter, we make 500 phone calls and make sure everything's paid up, or what's the process there for you?
Yeah, absolutely. It's something you can do annually or biannually is usually frequent enough to check on that. And there's some great monitoring services out there that will do this at a very low cost. They'll send you a report, and then you can look over that and see. But in general, it's not a problem as long as you stay on top of it. And if there's any issues, you can get the right help involved. But definitely having a note servicer in place is key. They are one of the key members of your team to be successful, and they handle a lot of the on the ground, a lot of the hands-on activities that go on.
Right. That's really, really cool. I love it. What is a mistake that you have made in the note investing business, and how would you tell someone else to avoid it?
Oh, great question. So a mistake that I made early on was buying small value notes, small loan balance notes. And here's why. it's very, for someone that's not familiar, just getting started, they may see a small balance note, a note with a principal balance of $10,000 or $5,000, right? They're out there, that you'll see them out there. But what I found over time is that it's the same amount of work and expense as it is for a $5,000 note, or for a $50,000 note, or a $500,000 note. Same exact expenses, same amount of time and effort. And so why focus all of that on these small notes? Because the ratio of the work and expenses to what you're making on that, it's not good at all. And so go into larger size assets as best as you can, because that's going to be the best use of your time and your resources.
Yeah. Well, I mean, that goes hand in hand with kind of the theme of the show, which is how to scale commercial real estate. That was the title of it.
Yeah.
But we do that over and over, which is like, it's just as much work to close one single family residence, as it is to buy an entire apartment complex. It's almost the same amount of work. It's like, it's almost the same amount of papers, maybe a few more, but not dramatically. Like, so you can find a $10 million apartment complex or a $100,000 house. It's, one might be slightly quicker than the other, but still in the end, it's just not a dramatic difference in the amount of work it takes.
Yeah, exactly. I love that, Sam. And that, like you said, it's the theme of your show, the ability to scale and ramp up. That's what has the most impact to you in your business and your growth trajectory.
Absolutely. Let me go back to maybe some more tactical things that you're doing inside of your business. So you're buying first position performing notes at the moment. I guess, how do you do that at scale? I mean, are there big note buying platforms out there that you just filter through and buy the ones you like? Is there relationship with banks? How are you doing that?
Yeah, this is highly relationship based. Highly relationship based. And so I've been active in this industry for the past dozen years. So we've built a lot of relationships with note sellers, with other hedge funds, with note funds, and we buy and sell notes between each other all the time. And so having those in place, it really allows for better access of notes. Yeah, there's some exchanges where you could go and buy like a single note here and there, but eventually when you're buying in bulk with larger purchase prices and larger volume notes, that's going to give you better access. It's almost like you can shop at a different store when you're doing this, and it opens up a lot more possibilities, a lot more opportunities. So in summary, to answer your question, it's through personal relationships. We all know each other in the note industry. We go to note conferences and industry events, see each other. And so it's super important to maintain those relationships on an ongoing basis.
Let's talk about interest rates for a second. This is a question I just thought about. Is there a correlation between the price that you pay for the note and the interest rate that loan is paying? Like, as interest rates have climbed,
yes,
are you going to now pay more for a note that's paying 5.5% than you would for the one that was originated 3 years ago that's paying 2.5%?
Yeah, absolutely. That will impact the pricing. It's all based on the yield. And when notes are bought and sold, it's not so much about the loan balance itself, but the yield based on that loan balance. And the loan may be discounted to get it to the appropriate yield for the marketplace. And so that does influence. But keep in mind, Sam, we may buy notes that were originated 3 years ago or 5 years ago or 10 years ago, right? And so the rate is whatever it was locked into those loan documents. That will never change from the point of view of the borrower. They always will pay the same payment, the same interest rate as agreed in the promissory note. But move as things change, things evolve. If the interest rate environment continues to rise, yeah, that will definitely impact pricing for sure.
Right. Yeah, I would imagine that the price of that loan would go down as it's trading hands between you and whoever is selling it. Like if say they're selling it to you, it's going to cost you less on the front end to buy it because the yield's lower. Is that right?
It may go down, but it may go up. There may be a stronger equity position backing that note. There may be a change in the profile of the borrower, of their track record. If the note today has, let's just say, a little bit of a blemished payment history, and then 2 or 3 years into the future, that gets cleaned up, the borrower is on track with all their payments, that note could be worth more actually for that reason. And so there are some different influences for sure. But what ends up happening in this industry, if you think about it, notes have a life generally of 5 to 7 years before the property gets refinanced or sold. And so you constantly get notes that are being paid off. And so at that time, you're redeploying the capital at the current market conditions.
Got it. That makes a lot of sense. And I like the idea. I'm kind of imagining and I know you're buying these in bulk, but I'm kind of imagining like this matrix where you put, there's a whole bunch of different things you're considering that can kind of spit out, hey, here's the actual value, or here's the price I'm willing to pay for that note. Like, oh, okay, we've got a borrower that pays on time. It might be at a 3% interest rate, but they've never missed a payment. There's all these different things. The neighborhood is amazing. The demographics in the area and the zip code are incredible. And so it's okay. Well, that note's worth more than maybe, a note that didn't have those characteristics.
Yeah, absolutely. And another thing over time is as you have more experience, you may be willing to take on a little more risk, maybe buy a note that has a problem, right? And that warrants a lower purchase price. If you know how to fix that problem, you could benefit. You could benefit because problems come up with notes. And it's like anything else, with enough time and enough money, any problem can be solved, right? If there's a document issue, title type of issue, it may take a year to do the legal work and the expense to clean that up. But in the end, now you have a clean file, all tightened up, and the value is now greater than what you bought it for.
Oh yeah. No, I'm an investor in a fund that does just that. And they bring on some really hairy deals, but the returns are exceptional because they figured out how to do it. And it's like, oh, well, they're buying stuff with hair on it, but we all know it going in. It's like, well, okay, good. And I think that's a really cool model. And again, it just shows the opportunity that's out there for those that understand and know how to seize it.
Yeah, it's just like with buying larger multi-unit properties, multifamily. If an asset has been neglected and it can be repositioned, there's a lot of opportunity there for a seasoned operator to come in and increase the value.
Yeah, absolutely. Tell me this, what's one thing a mentor or a coach told you that you would say is probably the best piece of advice you've received about your industry? The
best piece of advice that I've ever received is this: be a lifelong learner. Never stop learning. And I'd love to share a little quote with your audience, right? I'm a Philly guy. I'm from Philadelphia. And I love to look back at one of our founding fathers, Benjamin Franklin. And he left us with this beautiful quote. It's beautiful. And it goes like this: an investment in knowledge always will pay the highest interest. And what that means is always invest in yourself, in your learning, in your development, right? Attend workshops, attend conferences and events where you are around people that are ahead of you in your industry, and you can learn from them, stay up to date, and grow your knowledge, because no matter what happens, that can never be taken away from you. And so it's always like the first place to start. Invest in yourself, invest in your education, no matter what level you're at. You're never going to hit some level and say, okay, I'm done. I know everything. It's not like that. It's not like that. How many people do you know that once they graduated high school or graduated college, they never cracked another book again? And that's such a shame. It's such a shame. right? I mean, always seek to be learning, expand your knowledge, learn different things, and that is going to open up your mindset and open up all the possibilities for you.
I absolutely love it. Couldn't have said it better myself. Fred, thank you for taking the time to come on the show today and share with us the note investing business, how you guys are finding opportunities, what it means to invest in a fund, the types of notes that you guys are buying, some of the risks that are out there in the marketplace. And I mean, there's just been very informative. Appreciate you taking the time to come on the show today. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Thank you, Sam. The best way to connect with me is to visit my website, which is fredmoskowitz.com. However, if you prefer an easier spelling, you can always go to giftfromfred.com and sign up there. And I have a special report about note investing. Happy to send out by email to any of your listeners.
Fantastic. We'll make sure that gets in the show notes there, giftfromfred.com. And we'll also put Fred Moskowitz in the show notes as well. Fred, thank you again for coming on the show.
Thank you so much, Sam.
I appreciate it.